Before we begin, a quick and important disclaimer. This video is for informational and educational purposes only. I am not a licensed financial advisor or insurance agent. The information presented here is based on publicly available data, customer reviews, and industry analysis as of the date of this recording. Insurance rates and company performance can change, and your individual needs and rates will vary. Always do your own research and consult with a qualified professional before making any financial decisions. You're driving home on a Tuesday. The light turns green. You start to go and then bam. A car runs the red light and plows right into your passenger side door. Your heart is pounding. Adrenaline is coursing through you, but you're okay. The other driver is okay. They're apologetic, they admit it was their fault, and they have insurance. You exchange information, call the police, and your tow truck arrives. As your crumpled car gets hooked up, you take a deep breath and think, well, this is awful, but thank God I have good insurance. This is why I pay them over $100 every single month. But that feeling of relief, it doesn't last. The next morning, you call your insurance company. You're on hold for 45 minutes. When you finally get a human, they sound bored. They give you a claim number and tell you an adjuster will call you back in 24 to 48 hours. 3 days later, you're the one calling them back. The adjuster finally gets on the phone, asks you the same questions 10 times, and then goes silent for a week. Your rental car coverage is running out. The body shop is calling you for updates. You feel completely alone. And then the offer comes in. It's a joke. It's thousands of dollars less than what your car is worth. And they're refusing to pay for an original manufacturer part, insisting on a cheap aftermarket replacement. Suddenly, you realize the company you trusted, the one whose jingle you can sing by heart, isn't your good neighbor. They're not on your side. In your moment of need, they've become your adversary. This story isn't a rare nightmare. It happens to thousands of Americans every single day, and it highlights a terrifying truth about auto insurance. Most of us are flying blind. We pick a company based on a funny commercial or the promise of a low price, and we pray we never have to find out if they're actually any good. We are paying hundreds, sometimes thousands of dollars a year for a product we don't understand, to a company we can't trust. The average American driver, according to some studies, could be overpaying by more than $400 a year. That's $400 you're lighting on fire for potentially terrible service. But it stops today. This video is going to change the way you think about car insurance forever. We are not just going to give you a lazy list of the top 5 companies. We are going to arm you with the knowledge to dismantle the entire process. We're going to show you exactly what to look for, what questions to ask, and how to spot the red flags that signal a company will abandon you when you need them most. By the end of this presentation, you will know with absolute confidence how to get the best possible coverage at the fairest possible price. You will learn the one critical coverage option that costs pennies, but can save you from financial ruin. You'll discover the single biggest mistake people make when getting a quote that insurance agents hope you'll keep making. And yes, we will count down the top 5 best auto insurance companies in the United States for this year, based on a mountain of data. And I want to be clear about how we got this list. We didn't just Google it. We spent over 100 hours diving deep. We analyzed the latest J.D. Power customer satisfaction and claim satisfaction reports. We cross-referenced that with financial strength ratings from AM Best. That's the grade that tells you if a company can actually afford to pay its claims. We sifted through thousands of real customer reviews on forums and consumer websites. And most importantly, we examined the National Association of Insurance Commissioners Complaint Index, which is the official scorecard that tracks how many complaints are filed against a company relative to its size. This isn't about opinions or brand loyalty. This is about data. It's about empowering you to make a smart decision, not an emotional one. And I'll give you a hint. Our number 1 pick is probably not the company you're thinking of. It's not the one with the biggest advertising budget or the goofy mascot. It's a company that has consistently proven it puts its customers first, and we're going to show you the proof. So before we start our countdown from 5 to 1, let's quickly establish the ground rules. What makes an insurance company the best? It boils down to 4 key pillars. Pillar 1, customer service and claims handling. This is everything. When you have an accident, are they responsive, fair, and fast? Or do they treat you like a number? This is where we lean heavily on those J.D. Power scores and the official complaint data. Pillar 2, price and discounts. Let's be real, cost matters. The best company in the world isn't the best for you if you can't afford it. We're looking for companies that offer competitive base rates and a wide array of meaningful discounts. For safe driving, for bundling, for being a good student, for having anti-theft devices. Pillar 3. Coverage options and technology. A great company offers more than just the bare minimum. We're looking for flexibility. Can you customize your policy? Do they offer valuable add-ons like rideshare coverage, new car replacement, or accident forgiveness? And is their app and website actually usable in the 21st century? And finally, Pillar 4. Financial stability. This is the bedrock. You need to know that if a major catastrophe happens, a hurricane, a massive hailstorm, your insurance company has the financial muscle to pay out all its claims without going bankrupt. That's where those AM Best ratings are non-negotiable. Every company on our list had to excel across all 4 of these pillars. Alright, the stage is set. Let's get into it. Kicking off our list, coming in at number 5, is a company that has become a powerhouse, especially for a very specific type of driver, Progressive. Now hold on, I know what some of you might be thinking. Progressive? The company with the non-stop commercials and flow? But here's why they've earned a spot on this list. While their customer service ratings aren't always at the absolute top of the charts, they are a phenomenal choice for drivers who are considered high risk or have a less than perfect driving record. If you have a past accident, a speeding ticket, or even a DUI on your record, many of the so-called premium carriers will either deny you coverage outright or quote you a rate so astronomical it feels like a punishment. Progressive, on the other hand, built its business by being one of the first to use advanced data analytics to more accurately price risk. This means they are often willing to insure drivers that others won't, and frequently at a more competitive rate. They were pioneers in this space and they still do it better than most. Their other massive strength is their discount variety. They have a laundry list of ways to save money, from standard ones like multi-policy and multi-car, to more unique ones like discounts for signing your documents online or for being a homeowner, even if you don't insure your home with them. But their flagship tool, and the reason many people can get a great rate, is Snapshot. This is their telematics program, where you use a plug-in device or their mobile app to track your driving habits. Now, this is a double-edged sword. If you're a genuinely safe driver, you avoid heartbreaking late-night driving and speeding, you can earn a significant discount, sometimes up to 30%. However, if your driving is less than perfect, it can actually raise your rate in some states. The key here is transparency. Progressive is very upfront about this, and the tool gives you direct control over your premium based on your actions. For the tech-savvy, safe driver, it's a game-changer. Financially, they are rock solid with an A+ rating from AM Best. So, who is Progressive perfect for? It's the driver who values technology, wants a huge array of potential discounts, and particularly for those who may have a blemish or two on their record and are struggling to find affordable coverage elsewhere. They offer a pathway to good insurance when other doors might be closed. And that's the crucial difference. Progressive uses technology to cast a wide net, to say yes to more people. But what if you're not looking for the widest net? What if you're looking for the best experience? What if you believe that when something goes wrong, and with cars it eventually does, you want to talk to a human being who is empowered, empathetic, and actually wants to help you solve your problem, not just read from a script? If that's you, then our number 4 pick is designed from the ground up to be your perfect match. Coming in at number 4 is Amica Mutual. Now, that name might not have the billion-dollar advertising budget of some of the others, but in the world of insurance, it carries a heavyweight reputation for one thing above all else: customer satisfaction. This isn't just marketing fluff. It's a core part of their identity. For years, J.D. Power has consistently ranked Amica at or near the very top for auto claim satisfaction. Think about that. Not for being the cheapest, not for having the funniest commercials, but for being the absolute best when their customers need them the most. To understand why, you have to look at their name. Amica Mutual. Unlike a publicly traded company that has to answer to Wall Street every 3 months, a mutual insurance company is owned by its policyholders. That's you. This isn't just a philosophical difference. It fundamentally changes their business model. Their primary goal isn't maximizing shareholder profit. It's serving their members. This structure allows them to do something almost unheard of in the industry: offer dividends. In years when the company does well and has fewer claims than expected, they can literally send a portion of your premium back to you. This can range from 5 to 20% of your annual premium. Imagine paying for your insurance all year, and then getting a check in the mail that's essentially a refund for 1 or 2 months of coverage. That's the power of the mutual model. But let's make this real. Let's say you're driving home from the grocery store. It's raining, the roads are slick, and the person in front of you slams on their brakes. You react, but it's too late. It's a low-speed collision, a classic fender bender. Nobody's hurt, thank goodness, but your front bumper is crumpled and the other driver is, understandably, upset. This is the moment of truth for your insurance company. With many carriers, this is where the nightmare begins. Endless phone trees, unhelpful chatbots, adjusters who treat you like a fraud suspect, and weeks of waiting for a resolution. With Amica, the story is often completely different. You call the claims number, and a real person answers, often on the first or second ring. You explain what happened. The agent on the other end isn't just a call center employee. They're a trained professional. They'll walk you through the immediate steps, exchanging information, taking pictures, making sure you're safe. They'll pre-authorize a rental car for you right there on the phone, so you're not stranded. They'll give you a list of approved, high-quality repair shops in your area, or tell you it's perfectly fine to use your trusted local mechanic. Within a day, an adjuster calls you, not with suspicion but with a plan. The entire process is designed to reduce your stress, not add to it. This is what you're paying for. You're not just buying a policy, you're buying peace of mind. So what's the catch? Well, there are two. First, Amica is often not the cheapest option. Excellence costs money. They are selective about who they insure, which means their overall risk pool is lower. But they invest heavily in customer service infrastructure and paying claims fairly and quickly. If your number one priority is finding the absolute rock bottom price, Amica probably won't be your winner. Second, they aren't available in all 50 states, so you'll need to check their website to see if they operate where you live. For drivers with a clean record who value exceptional service and are willing to pay a little more for it, Amica is an elite choice. They are the polar opposite of a company trying to win on price alone. They are trying to build a lifelong relationship. But what if you could have it all? What if there was a company that consistently battles Amica for the top spot in customer service, but often does it at a price that beats even the budget carriers? A company so beloved by its members that they rarely, if ever, leave? Well, there is. And it's our number 3 pick. But there's a massive catch. Coming in at number 3 is USAA. For those who are eligible, USAA isn't just the best choice. It's often the only choice. It's the gold standard. The problem is, most of us aren't eligible. USAA stands for the United Services Automobile Association, and their services are exclusively for members of the U.S. military and their families. Their origin story tells you everything you need to know about their philosophy. Back in 1922, a group of 25 Army officers were struggling to get car insurance. Because they moved around so much, insurance companies saw them as high risk and charged them outrageous premiums or denied them coverage altogether. So they decided to insure each other. They pooled their own money and created a company built on military values: service, loyalty, honesty, and integrity. That foundation is still the bedrock of USA Today. They exist for one reason and one reason only: to serve their members. And because their membership is limited to a group with a shared background and values, they have created a fiercely loyal community. Their customer retention rates are the envy of the entire industry. When it comes to performance, they are simply dominant. In nearly every independent survey, from J.D. Power to Consumer Reports, USAA is ranked number 1 in every category: overall satisfaction, claims handling, pricing, and customer service. In fact, J.D. Power often has to list them as an unofficial winner in their public rankings, simply because their limited membership doesn't make them a fair comparison for companies that are open to the general public. So why are they so good? First, their pricing is incredibly competitive. Because they are insuring a lower risk group of people on average, their actuaries can offer lower premiums without sacrificing financial stability. They also offer a suite of discounts tailored specifically to the military lifestyle, like a significant discount for garaging your car on a military base, or for when you put your vehicle in storage during a deployment. Second, their customer service is legendary. Just like with Amica, you're dealing with highly trained, US-based professionals who are empowered to solve your problems. But with USAA, there's an added layer of understanding. They know the unique challenges of military life: the sudden moves, the deployments, the complex paperwork. They are built to handle it. The claims process is renowned for being fast, fair, and compassionate. So, who exactly is eligible? This is the critical question. You can join USAA if you are an active, retired, or honorably separated veteran from any branch of the U.S. military. This includes the National Guard and Reserves. Officer candidates in commissioning programs are also eligible. And crucially, eligibility extends to family. Spouses, widows, widowers, and former spouses who haven't remarried can join. And so can children and stepchildren of USAA members. This means that if your parent or spouse has or had a USAA membership, you are likely eligible for life, even if you never served yourself. For the small percentage of the population that qualifies, the search for the best auto insurance company pretty much starts and ends with USAA. It's the complete package, top-tier service at a bottom-tier price. But for the vast majority of us, the other 94% of Americans, USAA remains an exclusive club we can't join. So what about the rest of us? What about the everyday driver who doesn't have that military connection? Where can we find that incredible blend of a great price and reliable service when we need it most? Don't worry, because our top 2 companies are for you. And the company coming in at number 2 might just be the most recognizable insurance brand in the entire country, but their biggest strength, the real reason they deserve this spot, is something that most people completely overlook. That company is Progressive. Now hold on. Before you click away thinking, Progressive? The company with the peppy saleswoman flow and the endless quirky commercials. Hear me out. Because you're right. We all know Progressive. We know the name, we know the ads, we might even know about their snapshot device that tracks your driving. But that's all surface-level marketing. The real, game-changing reason Progressive is our number 2 pick is that they aren't really an insurance company. They are a data and technology company that just happens to sell insurance. And that fundamental difference in identity is what makes them an absolute powerhouse for a specific type of driver. Most people think usage-based insurance, the whole idea of a device monitoring your driving for a discount, started as a marketing gimmick. For Progressive, it was never a gimmick. It was the core of a revolution. They were one of the first to go all in on telematics, collecting billions upon billions of miles of driving data. While other companies were still relying on 100-year-old actuarial tables based on your age, zip code, and credit score, Progressive was building a terrifyingly accurate picture of what actually causes accidents. They know down to the millisecond that hard braking at a specific type of intersection is a massive predictor of a future claim. They know that consistent late-night driving is a bigger risk factor than the color of your car. Why does this matter to you? Because it means their pricing can be surgically precise. If you are a genuinely safe driver, but you're getting hammered on your premiums because you live in a high-risk zip code or because you're a certain age, Progressive, and specifically their snapshot program, can be your salvation. It gives you the power to prove that you are not a statistic. You are a safe driver and you deserve to pay less. Their entire system is built to reward real-world good behavior, not just demographic profiles. But the data-driven approach goes so much deeper than just the initial price. It completely transforms the claims process, which is, let's be honest, the only time you really care about how good your insurance is. Let's imagine a scenario. Let's call our driver David. David is a freelance consultant, driving to a client meeting in an unfamiliar part of town. He gets into a fender bender. It's not a huge crash, but it's stressful. The other driver is agitated, stories are changing, and David's day is ruined. With a traditional insurer, this is where the nightmare begins. Phone calls, waiting on hold, getting assigned an adjuster who you might not hear from for days, endless emails, and the dreaded process of getting 3 different quotes from body shops. The entire process is designed to be slow and adversarial. With Progressive, David's experience is different. He pulls out his phone, opens the Progressive app, and starts a claim. The app is clean, intuitive, and it guides him step by step. He takes photos of the damage right there on his phone. Because Progressive has data on millions of claims for his exact make and model of car, their photo estimating AI can often give him a preliminary repair estimate within hours, sometimes even minutes. There's no waiting for an adjuster to drive out and look at his car. But here's the truly overlooked superpower. David chooses to use Progressive's concierge claims service. Instead of him having to find a body shop and manage the repair, Progressive does it all. He drops his car off at a designated service center. They handle everything from that point on. They oversee the repairs with a pre-approved high-quality shop. They manage the payments. They even arrange his rental car right there on site. David doesn't have to make a single phone call to a mechanic. He just gets a notification when his car is ready, fully repaired, with the work guaranteed for as long as he owns the car. That is the power of a tech-first, process-oriented company. They took the single most painful part of having car insurance and re-engineered it for efficiency and customer peace of mind. It's not about a friendly agent holding your hand. It's about a ruthlessly efficient system that just works. So, who is Progressive for? It's for the pragmatist. It's for the driver who is confident in their safe driving habits and is willing to prove it to get a better rate. It's for the tech-savvy individual who prefers handling things through a slick mobile app rather than a phone call. It's an outstanding choice for gig workers like Uber or Lyft drivers because Progressive was one of the first to offer a proper, seamless rideshare insurance endorsement that covers the gaps left by the rideshare company's commercial policies. If you value efficiency, data-driven fairness, and an unbelievably streamlined claims process, Progressive is likely your best bet. However, they are not for everyone, and this is critical. If the thought of an insurance company monitoring your driving habits, even for a discount, feels like a massive invasion of privacy, then you should run in the other direction. The best rates at Progressive are almost always tied to participation in the Snapshot program. If you decline, you might find their standard rates are not as competitive. Furthermore, if you value a personal relationship with a local agent, someone you can sit down with face-to-face to review your policy, Progressive's direct-to-consumer model might feel cold and impersonal. They do have agents, but their core strength and focus is their digital experience. The system is the star, not the individual agent. Their customer satisfaction scores reflect this. J.D. Power often gives them high marks for their digital experience, shopping, app use, and claims, but they can sometimes lag behind competitors in traditional customer service interactions. It's a trade-off. You're trading the warmth of a personal relationship for the cold, hard efficiency of a superior system. For millions of drivers, that is a trade they are more than willing to make. Progressive's relentless focus on data has allowed them to grow into one of the largest insurers in the country, constantly innovating and putting pressure on the old guard to adapt or die. They are a technological force of nature in a deeply traditional industry. But as powerful as Progressive's data-driven machine is, it still can't compete with our number one pick when it comes to one critical factor: the human element. The company that took the top spot has built an empire not on algorithms, but on an almost fanatical obsession with customer loyalty, and they do it in a way that no other national brand has been able to replicate. And that company, the one that consistently tops nearly every single customer satisfaction survey, from J.D. Power to Consumer Reports, is USAA, the United Services Automobile Association. Now, before you click away thinking this is just another list, you need to understand why they are number one, because it reveals a secret about the insurance industry that affects every single driver, whether you can get USAA or not. USAA's entire business model is an anomaly. It's a member-owned association, not a publicly traded corporation chasing quarterly profits for Wall Street. This isn't just a small detail. It is the entire game. Their customers are their owners. This means their primary legal and financial obligation isn't to anonymous shareholders, but to the very people they insure. Imagine your insurance company's goal wasn't to pay out as little as possible to maximize profit, but to provide you with the best possible service and value, because you are, in essence, part of the family. That's the core of the USAA empire. But here's the massive unavoidable catch. It's an exclusive club, and for millions of Americans, the doors are sealed shut. USAA's services are available only to current and former members of the United States military and their families. This is their greatest strength and, for the general public, their most frustrating barrier. This isn't a marketing gimmick. It's their charter. They were founded in 1922 by a group of 25 Army officers who couldn't get car insurance because, as soldiers, they were considered a high-risk group. So they decided to insure each other. That foundational principle, a community taking care of its own, has never wavered, and it's the DNA that flows through every claims call and policy decision. So who specifically can get in? Let's break down this ironclad fortress of eligibility, because there are more ways in than most people realize. First, the obvious. If you are currently serving in the U.S. Air Force, Army, Coast Guard, Marines, Navy, National Guard, or Reserves, you're in. Second, if you are a veteran who has been honorably discharged from any of those branches, you are also in for life. This includes officer candidates in commissioning programs like ROTC, or cadets and midshipmen at U.S. service academies. But here is where the door creaks open a little wider, and where you might find a hidden key. It's the family connection. Spouses of USAA members are eligible. Widows, widowers, and unremarried former spouses who had USAA coverage during their marriage are also eligible to start their own policy. And here's the big one. Children and stepchildren of USAA members. This is a legacy benefit. If your mother or father has or had a USAA auto policy, you are very likely eligible to get your own for life. It doesn't matter if you ever served a day in your life. Think about that. Did your grandfather serve in the Korean War and get a USAA policy? If he passed that membership down to your parent can now pass it down to you. It's a generational key that gets handed down. This is why you should ask your parents or even grandparents if they ever served and if they ever had USAA. You could be sitting on a golden ticket to the best insurance in the country and not even know it. So why go through all this trouble? Why is it worth it? Because the service is, without exaggeration, legendary. When a hailstorm pummels a town in Texas, or a hurricane bears down on the Florida coast, you'll often hear stories of USAA claims adjusters being the first on the ground, sometimes with mobile command centers, cutting checks on the spot while other insurance customers are still trying to get through on a jammed 1-800 number. Their claims process is consistently rated as the fastest, fairest, and most empathetic in the industry. It's a direct result of their structure. They aren't fighting against you. They are working for you, their member owner. Let's talk dollars and cents. While not always the rock-bottom cheapest price in every single quote comparison, sometimes a bare-bones provider might beat them by a few dollars. Their overall value is almost impossible to match. A significant portion of their profits are returned directly to the members. This can come in the form of annual dividends or distributions credited to your subscriber savings account. It's not a guarantee every year, but it's a common occurrence. Think about that. Your insurance company might actually send you money back just for being a loyal customer. It fundamentally changes the relationship you have with the company. I remember a story from a USAA member whose son was in a serious accident several states away from home while driving the family car. The car was totaled. Within hours, USAA had arranged for a rental car for him to get back to his college campus, started the claim for the totaled vehicle, and had a representative call the parents not just to discuss the logistics, but to ask how their son was doing. The focus was on the human being, not just the asset. The process was seamless, compassionate, and shockingly efficient. That's the kind of peace of mind that you can't put a price tag on. That is the human element in action. It's what happens when a company's culture is built on a foundation of service and a shared bond, rather than on actuarial tables and profit margins alone. Now, no company is perfect. The most common critique, beyond the eligibility, is the lack of local agents. If you're someone who wants to sit down face-to-face with your insurance agent in a local office, USAA is not for you. They operate primarily online and over the phone. However, their digital tools, from their mobile app to their website, are so well designed and so comprehensive that for the vast majority of their members, a physical office is completely unnecessary. Their US-based call centers are staffed with representatives who are consistently praised for being knowledgeable and helpful. So, for those who can get it, USAA is the undisputed champion. It's more than just an insurance provider. It's a financial institution built on a bedrock of loyalty and service that other companies can only dream of replicating. If you have any connection to the military, your first step should be to check your eligibility. It is absolutely worth the 5 minutes it takes. But this creates a huge question. What about the other 94% of the country? What about the teachers, the firefighters, the software engineers, the small business owners, and everyone else who doesn't have that military connection? Is it impossible to get that same level of service and value? For years, the answer was a frustrating sort of. But one company has been quietly building its own empire. Not based on an exclusive club, but on something just as powerful: data. They have taken a completely different path to the top, using technology and a deep understanding of risk to create a powerhouse that offers incredible rates and fantastic service to the general public. They are the answer for the rest of us, and they are our number 2 pick. Progressive. The name itself says it all. For over 80 years, this company has been the driving force of progress in an industry famous for resisting change. If our number 3 pick, Amica, represents the pinnacle of old-school, relationship-based service, and our number 4, USAA, is the undisputed champion for a specific, deserving niche, then Progressive is the ultimate innovator for the masses. They didn't just join the insurance industry, they fundamentally rewired it. To understand why they are our number 2 pick, you have to understand that nearly every modern convenience you expect from an insurance company, paying in installments, buying a policy online, comparing rates instantly, was either pioneered or perfected by Progressive. They were the original insurtech company, decades before the term even existed. Their story begins not in a stuffy boardroom, but with 2 lawyers, Joseph Lewis and Jack Green, who in 1937 saw a massive untapped market. At the time, auto insurance was a luxury, primarily for safe, low-risk drivers. If you had a speeding ticket, a fender bender, or worked in a job deemed risky, you were often flat out of luck. Lewis and Green saw this not as a problem, but as an opportunity. They started Progressive Mutual Insurance Company with a radical idea: to provide auto insurance to more people, not fewer. They believed that with better data and smarter analysis, they could accurately price risk for everyone, not just the perfect drivers. This DNA, this core belief in using data to serve a broader audience, is the key to everything Progressive does even today. But the company truly came into its own under the leadership of Joseph's son, Peter B. Lewis. Peter was not your typical insurance executive. He was a visionary, a maverick, and an art aficionado who ran the company with the spirit of a Silicon Valley startup long before that was a cliché. He famously said, "Our vision is to reduce the human trauma and economic costs of auto accidents." Notice he didn't say, "Our vision is to sell insurance policies." He saw a bigger picture. Under his leadership, Progressive became a laboratory of innovation. In the 1950s, while other companies were still mailing paper bills once a year, Progressive introduced the option to pay premiums in installments, making insurance affordable for millions of working-class families. It was revolutionary. Then they introduced the industry's first drive-in claims service. Instead of waiting days for an adjuster to come to you, you could drive your damaged car to a central location and get a check on the spot. It was fast, it was efficient, and it was completely customer-focused. Nobody else was thinking like this. And then came the internet. While other legacy insurance giants saw the web as a curiosity, a digital brochure at best, Progressive saw the future. In 1996, they became the first major insurer to launch a website. 1 year later, in 1997, they became the first to allow customers to buy a policy online. Think about that. In an era of dial-up modems and AOL CDs, when most people were still afraid to put their credit card information online, Progressive was selling complex financial instruments over the web. It was an audacious gamble that paid off spectacularly. They followed this up with another game-changer: the ability to see not just their own rate, but the rates of their competitors, right on their website. The industry was horrified. It was like Coca-Cola putting Pepsi's prices on their vending machines. But Progressive understood a fundamental truth of the digital age: consumer trust is built on transparency. They were so confident in their pricing and their product that they weren't afraid of a direct comparison. This relentless drive to innovate brings us to why they are so dominant today. It all comes back to that founding principle: using data to price risk more accurately. And in the 21st century, that means telematics. Progressive's Snapshot program is arguably the most well-known telematics system in the world. The concept is simple. You let the company monitor your driving habits, either through a plug-in device or a smartphone app, and in exchange you can earn a significant discount. It measures things like how hard you brake, the time of day you drive, how many miles you cover, and any phone usage while driving. For good drivers, the savings can be substantial, sometimes hundreds of dollars per year. It is the ultimate expression of their original mission: to price insurance based on the individual, not the demographic group. Instead of just judging you by your age, your zip code, or your credit score, they can judge you by what actually matters: how you drive. But this is also where the conversation about Progressive gets complicated, and it's why they are a fantastic choice for some, but not for everyone. The Snapshot program raises legitimate questions about privacy. You are, in essence, trading a slice of your personal data and privacy for a potential discount. The app knows where you go when you go there and how you get there. Progressive is adamant that this data is used only for pricing your insurance, and that they have robust security measures in place. And for millions of people, the trade-off is well worth it. They are safe drivers, they have nothing to hide, and they'd rather have their rate determined by their own actions than by a statistical model of people who look like them on paper. However, if you're someone who is deeply uncomfortable with the idea of a corporation monitoring your every move, then Snapshot, and by extension Progressive's main value proposition, might not be for you. It's a personal decision, and there's no right or wrong answer. So who is Progressive the perfect fit for? First, the tech-savvy consumer. If you're comfortable managing your life through an app, from banking to ordering food, you'll love Progressive's digital experience. Their app is slick, their website is intuitive, and you can handle almost any task, from filing a claim to changing your coverage, without ever needing to speak to a human being. Second, the driver who isn't perfect. Because of their long history of insuring a wider range of drivers, their pricing models are often more forgiving if you have a ticket or an at-fault accident on your record, compared to companies that focus exclusively on preferred, low-risk clients. They believe in second chances as long as the data backs it up. And third, the budget-conscious driver who is confident in their own safe driving habits. If you know you're a good driver, you don't speed, you don't slam on the brakes, you don't text and drive, then Snapshot offers you a direct path to turn those good habits into real, tangible savings. Progressive lands at number 2 on our list because they represent the perfect fusion of a legacy company's financial strength and a tech startup's innovative soul. They have the scale and resources to pay out any claim, no matter how catastrophic, but they've never lost that hunger, that restlessness, that constant desire to find a better way. They forced an entire industry to become more transparent, more efficient, and more customer-centric. They are not always the absolute cheapest for every single person, but they are consistently competitive for a massive swath of the American public. They offer a powerful combination of fair pricing, cutting-edge tools, and the freedom to build a policy that works for you. They put the power in the driver's hands, and that is an incredibly valuable thing. So, if this titan of technology, this original disruptor that redefined the entire auto insurance market, is only our number 2 pick, who could possibly be number 1? Who has managed to build a company that can go head-to-head with Progressive on price and technology, while also challenging companies like Amica and USAA on customer satisfaction and service? The company in our number 1 spot is a household name, a brand you see everywhere. But the real reason for their dominance has nothing to do with their famous mascot or their catchy ads. It's a story about a quiet, strategic decision made decades ago. A decision that created a structural advantage so powerful, so profound, that it allows them to consistently offer some of the lowest rates in the country while maintaining stellar service. They built a better machine, and that machine is our number 1 auto insurer in America. That company is Amica Mutual. And before you say, who? Or I've never seen their commercials, that's exactly the point. Amica isn't spending $1 billion a year on celebrity endorsements and funny ads. They're spending it on you. Because Amica operates on a completely different business model than almost every other major insurer in America. It's a model so fundamentally aligned with the customer that it almost seems too good to be true. They are a mutual insurance company. Now that term might sound a little old-fashioned, maybe even boring, but I promise you, it is the single most important financial concept you will ever learn when it comes to insurance. It is the secret key that unlocks why some companies treat you like a partner, while others treat you like a liability. Think about a company like Allstate or Progressive. They are publicly traded corporations. They have shares on the New York Stock Exchange, and they have a legal fiduciary duty to their number 1 priority, their stockholders. The entire purpose of their existence, legally speaking, is to maximize profit for those Wall Street investors. Now think about how an insurance company makes a profit. It's simple. They collect more money in premiums than they pay out in claims. Every single dollar they pay to fix your car after an accident is a dollar that doesn't go into a shareholder's pocket. Every dollar they spend on hiring a top-notch, empathetic claims adjuster is a dollar that doesn't boost their quarterly earnings report. This creates a powerful built-in conflict of interest. From the moment you sign up, you are in an inherently adversarial relationship with your own insurance company. Their financial success is directly at odds with your financial recovery after a crash. Amica is different. A mutual insurance company has no stockholders. None. So who owns it? You do. The policyholders are the owners. It's not a publicly traded company. It's a private cooperative. Its only reason for existence is to serve its members, the people who pay the premiums. Their legal and ethical obligation is not to Wall Street, but to Main Street, to you. When there is no one demanding a slice of the profit pie, the entire dynamic changes. The company's goal is no longer to squeeze every last penny out of you for the benefit of distant investors. The goal is to provide the best possible coverage and service at the lowest sustainable cost for the collective group of owners. And here's the most incredible part. When they do their job well, when they manage their finances efficiently and have a good year with fewer claims than expected, they don't just hoard that extra cash. They give it back to you. It's called a dividend. For over a century, Amica has consistently paid out an annual dividend to its policyholders, often returning up to 20% of their annual premium. Let that sink in. You pay your premium for the year. And at the end of the year, the company sends you a check for a few $100s just as a thank you for being a member owner. It's not a gimmick. It's not a promotional rate. It is the literal embodiment of their business model. It is profit sharing where you are the shareholder. Can you imagine Geico or State Farm sending you a check for hundreds of dollars just because they had a profitable year? It would never happen. that money belongs to Warren Buffett and their other investors. At Amica, that money belongs to you. This structural advantage isn't just about a nice check once a year. It fundamentally changes the entire claims experience. Let's imagine a scenario. Two drivers, Mark and David, get into an identical, not-at-fault accident. A driver runs a red light and T-bones both of their cars. Both cars have the exact same amount of damage, worth $10,000 to repair properly with high-quality, original manufacturer parts. Mark has a standard, stockholder-owned insurance company. He files his claim. The company's internal software immediately flags it. $10,000 is a big payout. The adjuster assigned to Mark's case has performance metrics tied to minimizing claim payouts. He's trained to find ways to reduce the cost. He pushes for cheaper aftermarket parts instead of original ones. He gets a quote from a body shop in their network known for cutting corners. He questions whether some of the damage was pre-existing. The entire process is a negotiation. It's a battle. Mark has to fight for weeks, making call after call, to get what he is rightfully owed. The company is betting on him getting tired, frustrated, and just accepting a lower offer of, say, $8,000 to make the problem go away. That $2,000 difference is pure profit for their shareholders. Now let's look at David. He has Amica. He files his claim. The adjuster sees the $10,000 repair estimate. Their incentive is completely different. Their goal isn't to save $2,000 for Wall Street. Their goal is to retain a happy member owner for life. A happy David will continue paying his premiums for another 10, 20, or 30 years. He'll tell his friends and family about his amazing experience. The lifetime value of keeping David happy is astronomically higher than the short-term gain of lowballing his claim. So the adjuster approves the $10,000. They recommend a top-rated body shop. They expedite the rental car. The entire process is smooth, respectful, and focused on one thing: getting David back on the road and making him whole again. There is no conflict of interest. The company is simply fulfilling its promise to its owner. This isn't just a nice story. This is borne out year after year in every independent customer satisfaction survey in the industry. While other companies are a coin toss, Amica consistently dominates the J.D. Power rankings for auto claim satisfaction. They win these awards not because they have better commercials, but because their entire corporate DNA is wired to serve the customer, not the stockholder. So what's the catch? There has to be a catch, right? Well, there are two things to be aware of. First, Amica isn't always the absolute cheapest quote you'll get on day one. A company built on a high-volume, low-margin churn-and-burn model might throw a lower teaser rate at you to get you in the door. But when you factor in Amica's annual dividend, their initial quote often becomes one of the most competitive rates out there over the long haul. You have to look at the total cost, not just the initial monthly payment. Second, because they are a collective owned by their members, they have a vested interest in protecting that collective. This means their underwriting standards can be a bit stricter. They want safe, responsible drivers to join the club, because that keeps claims low and premiums down for everyone. They aren't trying to be the insurer for every single person on the road. They're trying to be the best insurer for a community of responsible members. So if you have a challenging driving record, it might be harder to get a policy. But for the millions of good drivers out there, this exclusivity is a feature, not a bug. It's the velvet rope that ensures the people inside are all contributing to a safer, more affordable pool. Choosing an insurer based on this mutual structure is the closest you can get to a guarantee of a fair shake. You are betting on a business model, not just a brand name. You are choosing to be a partner, not just a line item on a profit and loss statement. You are aligning your interests with your insurance company's interests, creating a relationship built on trust instead of conflict. But knowing the best company is only half the equation. The price you pay, even at a great company like Amica, isn't set in stone. There are specific, little-known strategies and discount triggers that can slash your premium by hundreds of dollars a year. And most people have no idea they even exist. The first and most powerful of these is something your insurance agent will almost never bring up unless you ask: usage-based insurance. You might know it by brand names like Progressive Snapshot or Allstate's DriveWise. It's also called telematics. Here's the deal. Your insurance company gives you a small device to plug into your car, or asks you to download an app on your phone. This tool then monitors your actual driving habits. It tracks things like how hard you brake, how fast you accelerate, the time of day you drive, and how many miles you cover. Now I know what you're thinking. I don't want my insurance company spying on me. And that's a valid concern. But let's look at the reality. Your phone is already tracking your location. Your car's own computer system logs data. The difference here is that you are voluntarily sharing a specific subset of that data in exchange for a massive discount. For safe drivers, this is a game changer. If you're someone who avoids late-night driving, accelerates smoothly, and doesn't slam on the brakes at every yellow light, you could see your premium drop by as much as 30 or even 40%. Think about that. A $400 a month premium could become $240, saving you nearly $2,000 a year, just for driving the way you already do. The risk is that if you're a genuinely bad driver, it could potentially raise your rates with some companies, but many now promise your rate won't go up, you'll just miss out on the discount. It's a way to finally separate yourself from the stereotype of your age group or the accident statistics of your zip code and be judged on one thing and one thing only: your own driving. Next, let's talk about a discount that feels like a throwback, but is more valuable than ever: the defensive driving course. Most people associate these courses with getting a speeding ticket dismissed, but nearly every major insurer offers a significant discount, typically between 5 and 10%, for voluntarily completing an approved course. These courses are now almost all online. You can do them from your couch in a few hours for about $25. A 10% discount on a $2,000 annual premium is $200. You spend $25 once to save $200 every year for the next 3 to 5 years. The return on investment is astronomical. You're literally turning $25 into $1,000 over 5 years. It's one of the easiest and most overlooked ways to instantly lower your bill. Then there are the affinity and occupational discounts. This is where your career and your connections pay off. Are you a teacher, a firefighter, a police officer, an EMT, or a nurse? There's a discount for you. Are you an engineer, a scientist, or a federal employee? There's a discount for you. Companies have crunched the numbers and found that people in certain professions are statistically safer drivers. They're more risk-averse, so they reward them with lower rates. The same goes for belonging to certain groups. Are you a member of a credit union, an alumni association, a fraternity or sorority, a professional organization like the American Medical Association, or a group for architects? Even being a member of warehouse clubs like Costco can sometimes unlock special group rates. You have to ask. These discounts aren't always advertised on the front page of their website. You need to call and say, "Here is a list of every organization I belong to, and here is my profession. What discounts do I qualify for?" Don't leave that money on the table. Finally, consider your vehicle itself. You probably know that a car with a high safety rating costs less to insure. But did you know you can get a discount for having daytime running lights? Or for having anti-lock brakes? Or for a factory-installed anti-theft system? Most modern cars have these features standard, but they are not always automatically applied to your policy. You need to make sure your insurer knows your car has them. These are small stacking discounts, maybe just 1 or 2% each, but they add up. 2% for the alarm, 1% for the VIN etching on the windows, 2% for the passive restraint system. Suddenly, you've shaved another 5% off your bill. These strategies, telematics, driving courses, affinity groups, and vehicle features, are the secret weapons to lowering your insurance costs, no matter which company you're with. But they become even more powerful when you combine them with a company that already offers incredible value and unparalleled service. Which brings us to our number 3 pick for the best auto insurance company in America. And this one is a legend. It's a company so revered for its customer service that other corporations, from banks to retailers, literally study its methods. It's a company that consistently tops every single customer satisfaction survey, not just in insurance, but across all industries. It's a company built not on profit, but on a mission of service to a very specific group of people. I'm talking about USAA. Now, right up front, we have to address the elephant in the room. USAA is not for everyone. Its services are exclusively available to U.S. military members, veterans, and their immediate families. If you don't have that connection, you simply can't join. And for the millions of Americans who don't qualify, that's a tough pill to swallow, because you're missing out on what is, by many objective measures, the single best insurance experience in the country. To understand why USAA is so good, you have to understand its origin. It was founded in 1922 by a group of 25 Army officers who couldn't get car insurance. Back then, military officers were considered a high-risk group by insurance companies. They moved around a lot, they were young, and they were seen as unreliable. So these officers decided to insure each other. They pooled their own money and created the United Services Automobile Association. From its very first day, USAA wasn't a typical company. It was a reciprocal inter-insurance exchange. That's a fancy way of saying it's owned by its members, the policyholders. It doesn't answer to Wall Street investors or a board of directors chasing quarterly profits. It answers only to the military families it serves. This fundamental difference in structure is the seed from which everything else grows. It explains their legendary customer service. When a USAA member calls, they're not just a customer. They're a fellow owner. The representatives are trained to understand the unique challenges of military life. Deployments, permanent changes of station, living overseas, these are not exceptions to the rule at USAA. They are the rule. They have systems and processes built specifically to handle these situations with incredible ease and empathy. Stories about USAA's service are legion. There are countless tales of them overnighting claim checks to families who lost everything in a fire, of reps staying on the phone for hours to help a deployed soldier's spouse navigate a complex claim, of the company going above and beyond to make a horrific situation just a little bit more bearable. This isn't a marketing gimmick. It is the core of their culture, born from that original mission. Military members taking care of their own. Beyond the service, their financial strength is impeccable. They hold the highest possible ratings from AM Best, Moody's, and Standard & Poor's. This means that no matter how catastrophic a natural disaster or how deep a recession, USAA has the capital on hand to pay every single claim from its members. It's a fortress, and their prices, extremely competitive, because they don't have to generate profits for outside investors. They can return that money to their members in the form of lower premiums and annual dividends or distributions. For those who qualify, it is very, very difficult to find another company that can match USAA's combination of price, service, and financial stability. They offer the full suite of insurance products, plus banking, investing, and retirement services, making them a true one-stop financial hub for military families. So what are the downsides? Well, the most obvious one is the strict eligibility requirement. It's a closed loop. The other potential drawback for some is the lack of a large physical agent network. Like Amica, USAA primarily operates directly with its members online or over the phone. While their service is fantastic, if you're someone who values sitting down face-to-face with a local agent in your town, USAA's model might not be the perfect fit for you. For the millions of active duty personnel, veterans, and military families who do qualify, USAA is more than just an insurance company. It's a trusted partner, an institution, and often the undisputed best choice. It sets the gold standard for what customer service can and should be. But what if you don't have that military connection? What if you want that same level of sterling reputation, financial strength, and great service, but from a company that's available to everyone? Well, the number 2 company on our list is one of the oldest and most respected names in the business, and it has built an empire on trust and reliability for over a century. And the way it empowers its local agents might just be the perfect antidote to the impersonal, call center world we live in. But what if the problem isn't the call center? What if the real problem is the darkness? The feeling that you're flying blind, being quoted a number that feels like it was pulled out of thin air, with no context, no comparison, and no control. What if the antidote to an old-world problem wasn't just a friendly face, but radical, blinding transparency? That's the question our number 2 company asked decades ago. And their answer completely changed the insurance landscape forever. We're talking about Progressive. And if you think you know Progressive because of their quirky commercials, you only know the tip of the iceberg. Because underneath the clever marketing is a company that operates less like a traditional insurer and more like a data-obsessed Silicon Valley tech firm that just happens to sell insurance policies. Their entire history is a story of being first. They were the first to offer drive-in claim centers, a revolutionary concept at the time. They were the first to let customers pay their premiums in installments, which single-handedly made auto insurance accessible to millions of working-class Americans. And in 1997, a time when most companies were still trying to figure out what email was, Progressive became the first major insurer to launch a website and sell policies online. They have always been moving forward, hence the name. But their most profound innovation, the one that truly shattered the old model, was something so simple, yet so audacious it sent shockwaves through the industry. They introduced the ability to compare rates. Not just their rates, their competitors' rates right there on their own website. Think about the psychology of that for a moment. Every other company operated like a black box. You'd call them, give your information, and they'd tell you the price. Take it or leave it. It was a one-way conversation. Progressive turned it into a dialogue. They said, "Here's our price. And just so you know we're being honest, here's what Geico, State Farm, and Allstate would charge you for the exact same coverage." This was a power move of monumental confidence. It was like Coca-Cola putting a Pepsi vending machine inside their own headquarters. It fundamentally shifted the power dynamic from the seller to the buyer. For the first time, the consumer had leverage. Progressive was betting on the idea that by giving you all the information, even if it meant you chose a competitor this time, you would trust them. You would remember them as the honest broker. And that trust, over the long term, was more valuable than any single policy. They understood that in the digital age, transparency isn't just a feature. It's the ultimate product. This obsession with data and fairness led to their next great revolution: Snapshot. Today we call this telematics, but Progressive was the pioneer. They looked at the old way of setting rates based on your age, your zip code, your credit score, your marital status, and saw a fundamental flaw. It was a system of proxies. It judged you based on demographic groups, not on you as an individual. A 22-year-old male living in a dense urban area was automatically considered a high risk, even if he drove like a saint. A 45-year-old woman in the suburbs was a low risk, even if she drove like a maniac. It wasn't fair. Snapshot was the answer. It's a small device you plug into your car or an app on your phone that measures not who you are, but how you actually drive. And this is where most people get it wrong. The number one fear is privacy. I don't want my insurance company tracking me like Big Brother. But that's a misunderstanding of how it works. Snapshot isn't interested in where you go. It doesn't care if you're going to the grocery store or a secret rendezvous. It's not a GPS tracker in that sense. It cares about three main things: how often you slam on the brakes, how quickly you accelerate, and what times of day you're driving. That's it. It's building a profile of you as a driver, not as a person. It's a voluntary contract. You are telling Progressive, "Don't judge me by my zip code. Judge me by my skill. Let me prove to you that I'm a safe driver, and reward me for it." For millions of people who were being unfairly penalized by an archaic system, this was a godsend. Suddenly, that 22-year-old city dweller could get a rate that reflected his actual careful driving habits, saving him hundreds, maybe thousands of dollars a year. It democratized the rate-setting process. Your rate is no longer something that happens to you. It's something you have direct control over. Every smooth stop, every gentle acceleration, every decision not to drive late on a Saturday night is you actively lowering your own insurance bill. And this data-driven approach permeates everything they do. Their list of discounts is one of the most extensive in the industry, and they are masters at automatically finding and applying them. Of course, they have the standards: multi-policy, multi-car, good student. But they go deeper. Signing your documents online? That's a discount. Paying your policy in full? That's a big discount. Being a homeowner, even if they don't insure your home? Discount. They are constantly crunching the numbers to find correlations that predict safety, and they pass those savings on. They also have unique coverages that show they're thinking about the modern driver. Take their custom parts and equipment value coverage. If you're a car enthusiast who has spent thousands on a new sound system, custom wheels, or a performance exhaust, a standard policy won't cover that. If your car is totaled, they'll pay for the stock version, and your investment vanishes. Progressive offers coverage up to $5,000 to protect those modifications. They also offer pet injury protection as part of a standard collision policy. If your dog or cat is in the car with you during a covered accident, they'll help cover the vet bills. It's a small thing, but it shows they understand that for many people, a pet isn't just cargo, it's family. Then there's the deductible savings bank. This is brilliant. For every 6-month policy period you go without an accident or a ticket, they subtract $50 from your collision and comprehensive deductible. It just sits there growing in the background. So, you might start with a $500 deductible, but after 2 years of safe driving, it's down to just $300. If you stay with them long enough, it can go all the way down to zero. It's a loyalty program that provides real, tangible value when you need it most. It rewards you for the two things an insurance company wants most: safety and loyalty. So, who is Progressive for? First, it's for the pragmatist. The person who believes in data, not dogma. The driver who wants to be judged on their own merit and is willing to use technology to prove it. If you're a safe, conscious driver stuck in a high-risk demographic, Snapshot could be the key to unlocking a fair rate. Second, it's for the savvy shopper, the person who wants to see all the cards on the table. If you're the type who opens 10 tabs to compare prices before buying anything, Progressive's comparison tool was built for you. It gives you the confidence that you're making an informed decision, not just taking a salesman's word for it. And third, perhaps counterintuitively, it can be a good option for drivers with a spotty record. Because their algorithm is so sophisticated, it can sometimes find a path to affordable coverage for someone with a past accident or ticket where more traditional, rigid models can't. They can slice the data thinner, identifying specific positive behaviors that can offset a past mistake. But it's not for everyone. If what you value most is a personal relationship, one agent, one phone number, a handshake deal, Progressive's model might feel cold. Their strength is in their centralized, hyper-efficient, data-driven system. You'll likely be talking to a different person every time you call their service center. They are incredibly competent, but you are a policy number in a highly optimized machine. For the person who wants to be known by name, the State Farm model we discussed earlier is going to be a much better fit. It's a fundamental trade-off. Do you want cutting-edge technology and transparent pricing? Or do you want a personal, dedicated advisor? We've seen the pillar of the community, the trusted local champion. And now we've seen the data-driven innovator, the technological disruptor. One built on a century of human relationships, the other on the relentless power of algorithms. They represent two completely different and equally valid philosophies of what an insurance company should be. Seems like you have to choose the old way or the new way, the person or the platform. But what if you didn't have to choose? What if there was a company that somehow managed to fuse the best of both worlds? A company that has quietly built a cult-like following, a legion of lifelong customers who are fiercely, almost irrationally loyal. A company that consistently dominates every single major customer satisfaction and claims handling survey, year after year, often by a staggering margin, for a reason that most people have never even heard of. Our number one pick isn't just another insurance company. It's a different idea altogether. That company is USAA, the United Services Automobile Association. And before you click away thinking, "Oh, that's the military one, I don't qualify," I need you to stay with me for a few minutes. Because understanding why USAA is consistently ranked number one, even if you can't get it, is the single most important lesson you can learn about choosing your own insurance. It reveals the fundamental flaw in almost every other insurance company, and it will give you the key to finding the next best thing, which we will cover. First, let's address the elephant in the room: eligibility. Yes, USAA is exclusive. It's open to active duty military, former military members who were honorably discharged, veterans, as well as their spouses and children. If you fit into that category, congratulations. Your search is likely over. For the 80+% of the country that doesn't, understanding USAA's secret is your roadmap to making the best possible choice from the options available to you. The secret is this: USAA is not a traditional company. It's what's known as a reciprocal inter-insurance exchange. Now, that sounds complicated, but the idea behind it is incredibly simple. You are not a customer. You are a member owner. Think about it this way. When you buy a policy from a company like Geico or Progressive, you are a customer. Those companies are publicly traded, which means they are owned by shareholders on Wall Street. Their legal fiduciary duty is to make as much money as possible for those shareholders. And how do they do that? By collecting the most they can in premiums while paying out the least they can in claims. Your interests and their interests are, at a fundamental level, completely at odds. You want to pay less and get more. They need you to pay more and get less so their stock price goes up. USAA has no shareholders. None. It is owned entirely by its members, the people who hold the policies. The CEO doesn't answer to a board of investors in New York. They answer to you. The company's primary goal isn't to generate profit for Wall Street. It's to provide the best possible service at the lowest possible cost for its own members. The entire conflict of interest that defines the traditional insurance industry, it just evaporates. This isn't just a feel-good marketing slogan. It's a structural reality that dates back to its very beginning. In 1922, 25 Army officers met in a hotel in San Antonio, Texas. They had a problem. Because they were military officers who moved around a lot, traditional insurance companies saw them as high risk and refused to insure their cars. So they decided to insure each other. They pooled their own money, created their own association, and agreed to cover each other's losses. That was it. That was the start of USAA. An organization founded not to make a profit, but to solve a problem for a community that was being ignored. That DNA, that original purpose, flows through everything they do today. Let's look at how it translates into real-world benefits that crush the competition. First, the price. Because USAA doesn't need to bake shareholder profit into its premiums, its rates are often significantly lower than anyone else's for the same level of coverage. But it gets better. If, at the end of the year, USAA has collected more in premiums than it paid out in claims and operating costs, what happens to that profit? At a normal company, it goes to shareholders as dividends. At USAA, it goes back to you, the member owners. Many members receive an annual dividend check, or a credit to what's called a subscriber savings account. You literally get money back from your insurance company. Think about how insane that sounds compared to any other insurer. Now let's talk about the part that really matters when things go wrong. Claims handling. This is where the difference between a customer and a member owner becomes crystal clear. At a traditional insurer, the claims department is often called a cost center. Every dollar they pay you is a dollar that comes out of the company's profit. Adjusters are often trained with incentives to minimize payouts, to find reasons to deny, delay, or underpay a claim. At USAA, the mission is completely different. Their goal is to help a fellow member. The stories are legendary. A family whose car is totaled in an accident thousands of miles from home, and USAA not only pays the claim quickly but helps arrange their travel and lodging to get back safely. A deployed soldier whose spouse gets into a fender bender, and the USAA rep walks them through every step of the process with a level of empathy and understanding that you simply don't find elsewhere, because the person on the other end of the phone understands the unique stresses of military life. They aren't trying to save a buck for Wall Street. They are trying to fulfill their promise to a member of their own community. This is why in J.D. Power's claim satisfaction studies, USAA isn't just number one. It's often in a league of its own, with a score so high it's statistically separate from the rest of the pack. Their coverage options are robust, offering everything you'd expect: liability, collision, comprehensive, plus excellent rental reimbursement and roadside assistance. They also offer a suite of discounts that are genuinely tailored to their members, like a significant discount for garaging your vehicle on a military base, or a massive premium reduction if you're deployed overseas and need to put your car in storage. And because they also offer world-class banking, home insurance, and investment products, the bundling discounts are substantial. So if you are one of the fortunate few who qualifies for USAA, the choice is clear. There is simply no other auto insurer that is structurally aligned with your best interests in the same way. It was built by the military community for the military community, and that focus has allowed it to create a product and a service that no profit-driven competitor can realistically match. It is, without a doubt, our #1 auto insurance provider in the United States. Now for everyone else, I know what you're thinking. You just spent 10 minutes telling me about a company I can't even join. But I did it for a reason. Because that core concept, an insurance company owned by its policyholders instead of by shareholders, is not entirely unique to USAA. There is another type of company, a mutual insurance company, that operates on a very similar principle. While USAA is a reciprocal exchange, a mutual company is also owned by its policyholders. And it just so happens that our #1 honorable mention, the company we believe is the best choice for the general public, is one of the oldest and most respected mutual insurance companies in the country. It's a company that has adopted that same members first philosophy and used it to build a reputation for service and fairness that stands head and shoulders above the publicly traded giants. It is the closest you can get to the USAA experience without ever having worn a uniform. And that is where we are going next. We're going to the United Services Automobile Association, better known as USAA. And let's be absolutely clear. If you are eligible for USAA, your search for car insurance should start and, in all likelihood, end right there. For decades, it has been the undisputed, heavyweight champion of the insurance world, consistently topping every major customer satisfaction survey from J.D. Power to Consumer Reports. It isn't just an insurance company. For its members, it's a financial institution woven into the fabric of their lives. But what makes it so special? The story begins not in a boardroom, but in a hotel in San Antonio, Texas, back in 1922. A group of 25 U.S. Army officers were trying to get car insurance. The problem was no one would sell it to them. In the eyes of the insurance industry at the time, military officers were a terrible risk. They moved around constantly, their jobs were inherently dangerous, and they were considered an unstable, high-risk group. Frustrated and uninsurable, they decided to do something radical. They decided to insure each other. They pooled their own money, created their own association and based it on the core military values of service, loyalty, honesty, and integrity. That small group of 25 officers has since grown into a Fortune 500 behemoth serving millions of members. But here's the critical part. USAA never forgot its roots. It is not a publicly traded company beholden to Wall Street shareholders. It is a member-owned reciprocal inter-insurance exchange. That's a mouthful, but what it means is simple and profound. The people who own the company are the same people who are insured by it. The company's success is directly tied to the well-being of its members. Profits don't go to enriching distant investors. They are returned to the members in the form of dividends, lower premiums, and most importantly, a level of customer service that is legendary. When you call USAA after an accident, you are not just a policy number. You are a member. They understand the unique challenges of military life, deployments, permanent changes of station, the stress on families. Their entire system is built from the ground up to cater to this specific community. Their claims process is consistently rated as the fastest, fairest, and most empathetic in the industry. While other companies might look for reasons to deny a claim, USAA members consistently report the company looks for reasons to approve it. The value proposition is simply staggering. For those who qualify, USAA often provides the best coverage at some of the lowest prices available anywhere. But of course there is a catch. And it is the only reason USAA is not the only company anyone would ever talk about. Eligibility. You cannot simply sign up. Membership is an exclusive privilege earned through military service. It is open to active, retired, and honorably separated officers and enlisted personnel of the U.S. military. It also extends to their families. This includes spouses, widows, widowers, and unremarried former spouses of USAA members, as well as their children and stepchildren. If your parents were USAA members, you are likely eligible. If you served, you are eligible. If not, then unfortunately, this gold standard of insurance remains just out of reach. It is the one massive asterisk on an otherwise perfect record. So where does that leave us? We've journeyed through the entire landscape of American auto insurance, from the tech-savvy disruptors to the old guard titans. Let's quickly recap the incredible options we've covered. At number 5, we had Progressive, the undisputed king of technology and data. If you are a safe driver, confident in your habits, and willing to let an app prove it, their Snapshot program can unlock savings that are simply unmatched. It's the choice for the modern data-driven consumer. At number 4 was State Farm, the good neighbor. This is for the person who wants a relationship, not just a transaction. If you value having a local agent who knows your name, who you can sit down with across a desk to review your policy, and who can advocate for you when things go wrong, State Farm's massive agent network is its superpower. Coming in at number 3, we had Geico, the master of simplicity and savings. For decades, they have honed their business model to a razor's edge, focused on one thing: providing reliable coverage at a rock-bottom price. If your primary goal is to keep as much money in your pocket as possible without sacrificing fundamental protection, Geico is your first stop. Our number 2 pick, and the best option for the general public, was Amica Mutual, the champion of customer service. As a mutual company owned by its policyholders, Amica delivers a premium white-glove experience that feels a lot like USAA. For those who prioritize a hassle-free, empathetic claims process above all else, Amica is worth every single penny. And that brings us to our number 1, USAA, the gold standard, the benchmark against which all other insurers are measured. It combines the low prices of a budget insurer with the unparalleled service of a luxury brand. It is, quite simply, the best car insurance company in America. Period. If you can get it. But here is the most important takeaway from this entire video. This list is not the answer. It is the start of your search. The single best auto insurance company doesn't exist, because the best company is different for every single person. The best company for a 17-year-old with a sports car in Los Angeles is going to be completely different from the best company for a 55-year-old with a minivan and a perfect driving record in rural Ohio. Your mission, now that you're armed with this information, is to find the company that is the best for you. And here is your exact step-by-step plan to do just that. First, assess your personal needs. Before you get a single quote, ask yourself what you value most. Is it the absolute lowest price? Is it having a local agent on speed dial? Is it a best-in-class mobile app? Is it knowing that if you have a catastrophic claim, the company will handle it with compassion? Be honest with yourself. Your answer to that question will immediately tell you whether you should start with Geico, State Farm, or Amica. Second, get at least 3 to 5 quotes. Never ever take the first offer. Use the companies on this list as your starting point. Go to their websites, use online comparison tools, or call them directly. The 30 minutes you spend shopping for insurance could easily save you $500 or even $1,000 a year. It is the highest paying job you will ever have. Third, dig for discounts. Every single insurer offers a pile of discounts, and they often won't apply them unless you ask. Are you a good student? Do you own a home? Have you taken a defensive driving course? Is your car equipped with anti-theft or modern safety features? Are you a member of a certain credit union, alumni association, or professional organization? Every yes is more money back in your pocket. Fourth, understand your coverage, not just your price. The cheapest insurance is often the one with gaping holes in its protection. Look at your liability limits. The state minimum is never enough. One serious accident can financially ruin you if you're underinsured. Understand your deductible. That's the amount you pay out of pocket before the insurance kicks in. A higher deductible means a lower premium. But can you afford to pay that amount tomorrow if you have to? Make sure you have the coverage you actually need, like rental reimbursement and roadside assistance if they're important to you. And finally, step 5, review your policy every single year. Life changes. You get married, you move, you buy a new car, your teenager starts driving. Any one of these events can dramatically change your insurance needs and rates. The company that was cheapest for you last year may not be the cheapest this year. Loyalty is a wonderful trait, but in the insurance world, it can be incredibly expensive. Setting a calendar reminder to shop your policy every 12 months is one of the smartest financial decisions you can make. Insurance isn't just a bill you have to pay. It's a promise. It's a promise that if the worst happens, if you're in an accident, if your car is stolen, if a storm hits, that someone will be there to help you put the pieces back together. Your job is to find the company that is most likely to keep that promise to you. Now I want to hear from you. Which insurance company do you use, and what has your experience been like, good or bad? The comment section on a video like this becomes an invaluable library of real-world experiences for everyone watching. Share your story down below, and let's help each other make a smarter, more informed choice. Thank you for watching.